Hey guys, how we doing? I'm gonna give everybody a moment to join the session. I've sent the link out on Discord, so we'll give everybody a few minutes to join before we jump into the thick of it. So there's been a bit of a pickup in downside volatility on silver today, which is nice to see. I narrowly evaded a long breakout on silver. How are we doing, Maestro? I hope you're all good, my friend. I'm currently in a couple of positions. I'm in Euro Yen shorts. I think I was in these, and I think I showed them yesterday. So the stop has now been trailed. It trails every kind of like few pips on a breakout. So it trailed as it broke out of these lows, trailed a little bit further, and now it's trailed again on the close of this hour. Maestro is short EJ as well. Fantastic work, dude. Fantastic work. It's nice to have a little bit of a relief on yen pairs, to be honest. After the past few weeks, it's kind of like this is just steamrolling. I always forget to turn this off. Like it's just been steamrolling for weeks and weeks and weeks, if not months, if not a year, right? So it's nice to have a little bit of downside momentum. I think probably just going to leave this to run till target. It's almost there, just under $20, which is great. I'm also in UJ buys, which will close in 2 hours, regardless of hitting stop or target. This closes at 8 p.m. UK time. So this will probably close for a small loss, I would imagine. But happy to take an L on that anyway, because I'm capturing the downside or the upside on the JPY via Euro Yen shorts. Had a relatively good day again. I mean, January for me, not to make this session about me, but January for me has been a fantastic month. Traded inside day on euro dollar today. Hit target on that. I mean, that's a little bit devastating. But it is what it is. We have the target on that. I think did I speak about that yesterday? Sure, I spoke about that yesterday as well. How are you doing, risk 1%? I hope you're all good, my friend. Son of the King caught some silver short and long today. And long, nice. Bouncing it both ways. I narrowly avoided this. So I have a breakout strategy. And what candle's this? 1 a.m., which is 11 p.m. UK time. So I remember checking this before I went to sleep last night. And it was pretty much a full candle at the time. So I just left the order in there because I thought this will likely happen. I did think the way that the candle was forming, on market rollover, I was like, it's likely going to sell off for a bit. What I don't like to see is kind of the first candle after rollover, when this order updates, to then tag the breakout. I'm like, taking a breakout on rollover. So I'll sometimes cancel those orders. But I kind of thought this was going to happen after the the past few days / weeks / years or a year on silver. But I'm happy to get in this breakout now if it continues. If it continues to move higher, I'm happy to leave this order in now. But yeah, a bit of what we notice. I've spoken about this quite a lot recently. Is the rankings in DarwinIA are very heavily correlated with volatility in metals and volatility in US indices. When we see those rallying, so when we see those rallying on the long side, generally the DarwinIA leaderboard has a bit of a reshuffling, mainly because most people are long, right? Let me just move this across here, put it back on one of my other screens. But then when we see like today, I think I was 50th this morning in the leaderboard. Now I have had a decent day again, so 0.3% almost. So I've gone up 12 positions. But I think what helps me in that in the leaderboard is the fact that silver's come down today, and there's been some downside momentum. So, but yeah, as I was saying, January so far is 3.83% for me, which is huge. Best month since October so far. So I'm hoping for another couple of weeks of strong performance. But it is what it is. We've got some profit to play with this month. So I mean, this is where you could approach this in two ways, right? Where we could go, well, your average performance per month, let's say, is 3%. I'm 1% above that. Do I stop trading for the month? Do I kind of take my profit and walk away? But I sit on the other fence. I'm like, well, if I'm up 4%, I'm happy to continue risking, because if it's a really hot month, I know that I can perform up to 10%, 7%, 5%. I know that there's more room for upside, but I'm also happy to give away one of this 4% or 2% of it end of month, still in green. But I've given myself the opportunity to have, a bit of a banger month. Son of the King, I noticed that 2 big moves in metals creates big moves in the rankings. 100%. So you see it more in silver. I mean, it'll be hard to tell, because I think LVFZ is down on the day anyway. Yeah, it's not been too bad. But yeah, you see it in silver a lot, mainly because there's a lot of guys in silver who will just long indices and metals. But yeah, you do see a big reshuffling. Swinger Capital, hey Kieran, how's it going? It's all good on my end, dude. Hope it's all good your end also. Tail, who's that handsome man? I hope you're referring to me, my friend. Yeah, Maestro, it's too early to start, but yeah, exactly. If you remember back to a few, like probably more so last year, I used to talk about this a lot, where people would ask, if I've hit a certain target for the month, should I stop trading? And I always used to say, like, have some conviction in yourself. Don't ever stop trading. Like, just because you've hit a target or a requirement or whatever it may be, it's all artificial, right? Even trading on Darwinex, it's an artificial leaderboard. Like, it's not, you don't gain anything. Well, no, I'm kind of lying there. I guess it is, but it's like, you should be putting these short-term targets in the way of your long-term success, right? So why stop just to gain an allocation? Why stop just because you're coming out of the calibration? Why stop, just because you've had a good month? Invariably, good months generally get better, especially as a discretionary trader. Like, if you're performing well, you should keep your foot on the gas. The only period of time I have off is over Christmas. So you can see I had a bit of a flat line here where I didn't trade for like 2 weeks. Other than that, I've never, ever switched my systems off. And I don't think I ever would. Cliff Locus, I was long on Apple and Microsoft today, won the Apple trade. Love to hear it, man. Love to hear it. Let's open up TradingView. Tal, end of month XXBI is gold, Kieran. You happy? I am ecstatic, dude. I'm ecstatic. You'll have two diamonds in gold then. Fantastic work. Physics, welcome, dude. Appreciate you being here. Good move on scrapping the permanent allocation today and housing everything under boosters. Much clearer. Absolutely. And on permanent allocation, so of course, like we never hide behind a mask. We're always transparent with everything that we do, and these allocations, of course, are virtual. And so if we're giving out a virtual allocation for life, whilst it's great, it also adds a risk to life, or risk for life for us as a business. And so what we can do, and what we do with the boosters, is we hedge out that risk, or at least we hedge out your performance fees of that allocation, right? So if you have a large booster allocation, or if you're in DarwinIA Gold and have proven yourself over, an extended period of time to be a long-term profitable trader, then what we will do is we will put a percentage of live capital away of the allocation that you have, so that it's generating real performance fees, so that we can pay you from that. So the permanent allocation, it was great for a period of time, but is it sustainable long-term? Who knows? We don't really want to take that chance. Microsoft, Apple. So you was long. Oh, there's a bit of a nasty wick. Yeah, I can see why you won Apple and not Microsoft. Google down big on the day as well. I don't know if I missed something. For the guys who missed it, I think I spoke about it yesterday. Apple have officially announced that they're going to be using Google's Gemini for Apple Meta Intelligence, which is super interesting. I think Apple missed a big one by not focusing on AI. I don't think it's the end of the world, but it's funny how Samsung and now Apple are both taking the AI generated by Google, or the AI built by Google, to kind of power their systems as opposed to building their own. It's interesting. Shows how fast this sort of AI revolution is going, Son of the King, can US clients get more virtual capital besides Darwinex allocations? I heard you saying yesterday US clients can't get investor allocations. Nope, US clients can get investor allocations. You can't invest as a US client. So if you're trading through Darwinex Zero as a US trader, you can absolutely get Darwinex allocations, booster allocations. or sorry, DarwinIA allocations and also investor capital. It's just you can't invest through the Darwinex exchange. And you also can't trade a live account either. Johnny Lockswood, enjoyed the strategy development with Blaine the other day. Appreciate that. We'll be doing it again next Tuesday and most likely every Tuesday after that. I want to build it into a bit of a series so we can build some things together and you guys can take away some real value from that. Swing of capital, not trading for a period will decrease the VAR. For example, I have a huge swing and I'm closing fully, my VAR will decrease, right? Not necessarily. So your value at risk takes into account two periods to average off. So it takes in the past 45 days, which is pretty much like a month and a half worth of trading decisions, maybe 2 months worth of trading decisions. And it also takes 6 months worth of trading decisions into account as well. So basically, if you make an error or you have a small change of behavior, it doesn't just automatically kind of readjust. It will give you a little bit of leeway on that because it's all based on averages. So don't worry too much about this. Tail, is it worth starting with 1K and D Classic and trying to get investors and capital there? I mean, there's no difference, right? In my opinion, honestly, because if you start with 1 grand on Darwinex, you're still gonna have to prove your record, right? I mean, you're still gonna have to prove the fact that you can manage capital. That's gonna take months and months and months anyway. So if we look at if we load up Darwinex, the first thing that we measure is your experience, right? So of course, this is kind of a calculation that takes into account time and amount of trades that you place. So your experience is going to start from 0, whether you're trading on 0 or classic. Now, of course, if you have kind of a network of your own investors, then yes, you could open up a classic account, start trading, and they could invest into you straight away. However, without that trust, like if you're expecting just a random investor to come and allocate you capital, probably not going to happen. Well, I say probably not going to happen. It's definitely not going to happen unless you have like some crazy performance. So is it worth it? You tell me. You tell me. Lift Locus, I'm in profit on Microsoft, but it keeps fluctuating in place to trades. End of day yesterday. Okay, makes sense. Rob, how we doing? At hospital with the ground at Mo, so I can't watch, but got phone by ear for now. Hope everything's good, my friend. Hope everything's good. And yeah, you won't miss much. Don't worry. I'm gonna do a Darwin review. So if anybody wants me to take a look at their Darwin and do a full analysis of it, of course, just put your ticker in the chat, or I'm happy to just carry on chatting. We can talk markets. Completely up to you guys. Kid Story Corner, how we doing? Kieran, can you please help to explain how to stay under the radar of the risk engine? It's frustrating me by reducing my multiples. Okay, so let's break it down. Your value at risk is, let me get what's best for me to write on. Paint's a little bit rubbish. Let's do it with Trading View. Trading View is quite good for this sort of thing. I've never explained it in this way before, so I'm going to try my best. But if it doesn't make sense, or if I'm not making sense, please tell me, and I will slow it down, and I'll try a different way. So we have your deleverage, which is calculated on a position by position basis. That feeds into your value at risk. And then this calculates your risk multiplier. Now, there is limits over here on the deleverage, okay? Let me change that to that arrow. So we basically monitor your deleverage per position over a period of time. Okay, so there's a maximum allowed deleverage per position for a specific period of time. If you exceed that deleverage threshold, then your value at risk will spike, your risk multiplier will lower, and the risk engine will start closing certain parts of your position to monitor the deleverage. So this is kind of how everything is calculated. The VAR and the risk multiplier kind of works as such. Let's turn this into an arrow. Let's also make it a little bit bigger. So your deleverage is how we calculate the risk on each position. That then gives us your VAR, your value at risk, which is an average of your deleverage. So it kind of works like that. And then that is the self-balancing mechanism with your risk multiplier. If your value at risk goes up, your risk multiplier will decrease. If your value at risk goes down, your risk multiplier will increase. But it's all based on the deleverage per position. So what I would be doing is I would be looking at your average deleverage, which you can do. You have to go on your Signal account. So you can see your average deleverage here. Now, I have never exceeded the threshold to have the risk engine ever intervene in my trades. So really, when I'm in a position on my Signal account, the Darwin is always in a position, and it's pretty stable from the point of I risk the same amount or roughly within the same band per trade. So I don't really have any issues with that. It all depends on how you risk and what your kind of maximum risk is at Signal account level. So I don't know if you could give me a little bit more information or give me your Darwin and maybe I can take a look at it. I appreciate this is quite difficult to understand. It might be worth reading through this, because on here it tells you the limits of how much your deleverage can be if it ever wants to load. With limits, there is a limit. Just explain it somewhere. Maybe it's not on this one. I'll have to find it. I'm sure it's on one of the deleverage ones. Is it on value at risk? I tell you which one it might be on. It might be on the Darwinex K-base. It might be on this one. I don't know why, but I think my internet's running slow. It's probably because I've got my server open with all my strategies on. I've got quite a few other things open as well, but usually I don't have an issue. We do have it somewhere. Here we go. So this explains a little bit more about the deleverage. So you can see for positions lasting less than 30 minutes, the maximum deleverage allowed will be 16.25. If your deleverage exceeds that threshold, the risk engine will come in and start closing some of your positions. And you can see over time that deleverage comes down. So it's always better, in my opinion, although it doesn't really matter, risking less and letting the risk engine scale you up. You have less chance of the risk engine coming in and closing some parts of your position. In terms of like stability, I'll show you my value at risk so that you can understand what stability looks like. That's my VAR since May last year. Okay, so it's super stable. I don't have any spikes. I don't have any increase in, position sizing. I'm not trying to sling it on one trade. So as long as you're doing these things where you're staying consistent and you're monitoring your deleverage, I don't do that. I know it's there. I don't monitor my deleverage per position. But I understand that I'm being consistent with how much deleverage I'm taking on per position, then you should be okay. But like I say, if you can share your Darwin, I'm happy to look into it a little bit more, or even do a one-to-one session. I'm happy to jump on a call at any point and go through this in a little bit more detail. Tal said, maybe I need to rewrite it. I want to test or use my strategy on my own account, live accounts. I want to do it on D Classic. I mean, there's no difference really. The only difference would be, so for example, if I wanted to test my portfolio and do it on a live account, I would have to drop minimum $50,000 into a live account purely based on the margin I need to run my strategies. If you don't have that issue, if your strategy can be ran on an account with $1,000 in, then absolutely test it on a live account. However, because the Darwinex Zero servers are all live, and we basically replicate all the commissions, the charges, the slippage, the spread from the LP feeds that we get, you're essentially getting a live feed anyway. So it just depends whether you want to pay 50 euros a month to test or whether you want to put $1,000 at stake. If it's something that you built yourself, maybe have a little bit more confidence to test it on a live account. If it's an EA or something that you purchased online on a marketplace, I probably wouldn't be testing it. I'd rather do it on D0, in all honesty. FCPZ, let's take a look, Son of a King. I'm just going to read the other comments that I've missed. FCPZ. You mentioned about the boosters for the stream. I didn't mention the boosters. Or did I? I don't know. Let me know, Rob. Physics, not sure if you're allowed to promote yourself, so I'll do it for you. Kieran knows what he's doing. He's Darwin is investable. I am invested in it. He's already making me money. I appreciate that, dude. Yeah, I mean, I guess I promote myself because usually I use myself as a case study. Like I always have XOQP open when we're talking about these things, but I do appreciate that. The thing I love about XAQP and where it is now is, and again, not to make this too much about me, but is when I'm sat in these sessions, it's nice to know that, again, you guys can have that respect for me. It's not that anybody can stream for an hour a day and say, oh yeah, but I live stream so you can see me trade. But you know, if you're streaming for an hour, you don't know what that guy is doing for the other 23 hours in a day. So the main thing for me is that you guys know that I live and breathe this. So when I'm talking to you about it, I do it myself, and I have been doing it for a long time. You know, I'm not just some random guy who gets paid to come and talk to you. I actually do the same thing as you guys. So I appreciate that comment, Physics, big time. Risk 1%, KD. Yes, I will check it if we have the chance after I've done FCPZ. Lift Locus, I have 2 end-of-day strats for gold and equities, but I opted for the US stocks account to avoid swap fees. Should I have chosen the CFD account instead to be able to trade gold? I mean, it's completely down to you. If you wanted to trade gold and equities in the same account, then yeah, most likely the CFD account would have been better. There we go. Physics has answered you better than I have anyway. Appreciate that, Physics. Appreciate that. Kid Story Corner, IPUH, Darwinex, IPUH. Also, shout out to Physics as well. You've been smashing it recently. I presume I'm okay to share your Darwin because you talk about it publicly. Already qualifying for gold. How long are you in? Since June? Well, since August last year. It's 1, 2, 3, 4, 5. Just under 6 months. Already pretty much qualified for gold. It's just a matter of timing now. So big up to you, dude. You taught the talk, and then since August you've been walking the walk publicly and you know, talking about it on Twitter a lot. So massive respect to you, dude. Physics is my cousin. Is he actually though? Yeah, IPUH. Okay, so let's take a look. And then we'll get into the Darwin analysis. Okay, so your VAR's been increasing. Have you been changing anything in terms of there's four factors that will affect your value at risk. Oh Lord. 4 factors that affect VAR. Position sizing is number 1. Asset volatility. We have trade duration, and we have trade frequency. So these are the 4 factors that will affect your value at risk. Okay. Now the reason that I put loads of exclamation marks next to position sizing is because I usually split these into two different sections, right? Because your asset volatility, your trade duration, and trade frequency all form part of your strategy. Technically, your position sizing does not. Like, it might be baked into your strategy to a degree, but you can always increase or decrease risk. So I would never say change how you trade just to satisfy the Darwinex risk engine. But I would say, adjust your risk if you're wanting to change your value at risk or increase or decrease your multiplier, although I don't think it's necessary for anybody. So what I would push your way first is, have you changed any of these? I mean, if you're trading gold, which I think I saw from your maximum excursions that you do, the volatility of metals has increased recently, probably not enough to... How much did your VAR increase? From 2 to 7.5, it's like a 3x. The asset volatility probably isn't enough of a reason to have increased your value at risk by 3 times. So I'm presuming that you've changed your position sizing, but please correct me if I'm wrong on that. I'm just making assumptions here. So I would say if you're changing your sizing, that's why you're seeing an increase in your value at risk and a decrease in your risk multiplier. Again, there is self-balancing mechanism. So when one rises, the other one falls, and vice versa. Physics. Hey, Kieran, what is your institutional communication channel at Darwinex? Would you mean internally, like how we communicate internally, or with institutional investors? Which do you mean? Lift Locus, was it Lift Locus? No, it wasn't. It was Son of King, FCPZ. Let's take a look. Okay, so we've got just under 6 months worth of data. So you guys know I like, okay, to add more than 100K to index. Send me a DM on X just to remind me after the session. And what I'll do is I'll put you in contact with Antonio Luque, who's head of institutional sales at Darwinex for the index. We have 2 ways to do that. You can invest it through the platform, or you can invest via an AMC. I know you're already an investor in the platform, so it might be easier for you to do it through the platform. But you can also invest via an AMC. The performance varies slightly with AMC, usually with the AMC being slightly higher because there's less commissions in terms of like converting currencies and stuff like that, because it goes direct through your bank. But of course, I'll put you in touch with Antonio and he can kind of explain that in a little bit more detail to you. Okay, so generally I like more than 6 months, purely because I think 6 months, even a year sometimes, is too small of a data set to be able to make adjustments and make decisions about changing a strategy. If we take a look at how many trades you have. Okay, so you got 4,100 trades. So even though your track record's not that long, you have a lot of trades that we can analyze and that we can look at and potentially make decisions from. However, having said that, 6 months is still very condensed within sort of one market regime, one market trend, especially if you're trading specific assets like the past 6 months on yen pairs or the past 6 months on metals. It's very easy to just go long and go long and go long. But what happens when the regime shifts? What happens when, gold falls from, $4,600 back down to $3,000? Can you still keep up that performance? So what I don't like doing is making too many premature decisions based on overfitted data. I'm even more so on that these days, now that I build multi-strat portfolios. It's like, for example, have I got a report on here? Let's just take a look. It's a load of random report. Trade analysis. So we could go P&L by hour. Okay, that's a bad report to load. Let's show this one. Okay, so we could take a look at this, right? And this is 8 years worth of data. And we can see that consistently this strategy has lost money within these hours of the day. Okay. Now, if I look at that and I go, well, the answer's simple. I need to turn it off at 4 a.m. I need to turn it off at 9 a.m. I need to turn it off at 3 p.m. and at 5 p.m. Jobs are good, and because then it only wins. All I've done is take the data set that I have in with no kind of consideration for what happened before this set of data, or no consideration what's going to happen after it. And I'm literally just removing the losers after the fact. Okay, and just removing the losers at least within this data set. So I mean, I guess it's a little bit off topic, but that's why you see so many back tests that are precision perfect. And if you go on MQL Marketplace, you will see so many indicators, or so many strategies, I should say, for sale that just have that perfect backtest result. And all people do is they just go through this and they just filter out and filter out and filter out all of the losers. Now, I did speak about this yesterday, is where there's a difference with overfitting, which does fit to what we're talking about now when we're talking about such a small sample set of data, and you know, trying to remove all of the winners and just double down on, remove all the losers and double down on the winners, is you run the risk of overfitting that strategy for that period of time. Now, I did speak yesterday on the difference between, for example, and this is a perfect strategy to look at, is going, okay, well, this underperforms on this hour, this hour, this hour, and this hour, and just turning off the random hours that the strategy is unprofitable. Whereas we could look at, for example, going, well, what I'm going to do is I'm going to shut the strategy off at 8 p.m. and I'm not going to let it trade until, you know, whatever time it may be. Let's say 10 a.m. So all I'm going to do is I'm going to let it trade this period of time here. Yes, I'm going to remove some winning trades, of course. I'm also going to remove some losing trades, but that's where it's the most consistent. And deciding, okay, there's a time window where historically it works better as a strategy, rather than just randomly removing the hours. I think if we create a what if, so it's 0, 4, 9, 15, 17. So if we remove 0, 4, 9, 15, and 17, everything else is ticked. We'll create what if alternative. Let's delete the euro yen one. So we've now got a version of that strategy where it just doesn't trade those hours. Now, if we look, it's gone from a profit factor of 1.4 to 1.85. Win rate's gone up by 7%. Max drawdowns reduced. The profit has obviously increased. So we go, where's the what if? Here we go. Now we look at the P&L by hour. Fantastic. Doesn't take any losers. Okay, so again, I'm probably getting a little bit off topic here, but I think it's important to understand there's a difference between analyzing and making decisions to overfit a strategy, because now this looks far better, but we know that all we've done is just remove the losing trades from the backtest. Anyway, I'm going to stop ranting on about that because I think you kind of get the point. It was a little bit of a long-winded way of me saying 6 months is okay, but the more data we have, the better. In fact, you haven't even ticked over 6 months yet. When did you start? 6th of August. So 6th of Feb will be your 6-month anniversary. Okay. Assets and timeframes. So 50% of your trades are on FX, 45% win rate. Commodities, 25. The rest of your trades split pretty much 50-50 between indices and commodities. Indices being a little bit lackluster, could just be due to you know, the market regime for the past 6 months. What's interesting, however, and this is something to potentially take a look at, is if we look at your win rate compared to your return, both your commodity trades and your FX both have a sub 50% win rate, so roughly 45% on both, and they both have a positive expected value. Commodities pretty much double FX if we consider how many trades to the return. So in my opinion, the way this looks is that your most efficient trades come from commodities, second from FX, and your least efficient trades come from indices from an expected value perspective. Now, what I would be looking at is, why do I win more trades on indices yet I haven't made a profit? Are you trading a different strategy? Are you managing the trades differently? Is it a market that just doesn't work with your strategy? Because yes, every market has a different characteristic. It has a different nature. It has different traders. And therefore, you know, we can never just go one strategy can trade all markets, in my opinion anyway. So I would be looking at the efficiency of your indices positions here. Euro dollar. Okay, so you're heavy on euro dollar, gold, and NASDAQ. Again, it's just interesting that you're profitable pretty much across the board with a sub 50% win rate. But then when you add 10% to your win rate, you actually lose money on the NASDAQ specifically. Like, to me, that's a bit of an outlier. That's something, and what these sessions are for, right, is to try and find these things that kind of don't make sense or don't add up or stand out. Because whilst there's not too much difference, I'm going, well, there's a clear efficiency error here, or efficiency issue, I would say. You take the same amount of trades on indices as you do on commodities, pretty much to the dome. You have a higher win rate, yet you lose money. And then we take a look at commodities versus FX. You take half the positions on commodities as you do on FX, have roughly the same win rate, yet you're making double the profit. The profit is like, or the return is basically the same, but when we consider per trade on trade by trade basis, of course, the efficiency is far higher for commodities. Now, that's not to say you should stop trading NASDAQ at all, because again, like I say, it could just be market regime. It could just be a period of time. It could just be the fact you've had a few bad trades. We just don't know. But it's definitely a pattern I will keep in my head because, you know, some people are masters at trading one asset, but then they struggle to trade another asset. Tom Dante used to talk about this quite a lot when he used to work at Fusex, is you would be assigned an asset, whether it was something like the DAX or the Bund. And he used to talk about a specific trader who could trade the Bund really well. But because he found it boring, he kept going over to the DAX and he kept getting his arse handed to him. And he would not learn his lesson just because he wanted to be excited when he traded. What stack of cash, physics, what stack of cash should I send to your compliance team to include IBIT in your investment universe? I mean, you can send it to me and I'll try and convince him. I'm just joking. Son of the King, yeah, I'm a bad indices trader. I've noticed I don't trade it as often as I did in the beginning. Yeah, I mean, I'm the same, right? Like, I'm not a massive fan of indices. I trade the NASDAQ, and I think I trade the NASDAQ profitably on a few strategies that I have, but it's one of my least favorite assets to trade. But everybody is unique. Everybody has their own style. And it's like, you can go onto X or YouTube and you will just see thousands and thousands and thousands of traders who appear to be killing it on NQ futures, and this is all you need to make loads of money a day on NASDAQ. And it's like, come on, like, you know, it doesn't work for everybody. Risk 1%, I think I'm quitting gold this year as well. It's not for me. Yeah, again, gold moves in a very unique way. I tend to think with something like gold or NASDAQ, these are very, you know, specific pairs here, is that you can kind of come in every day with this pre-baked bias that the asset should move up in value. It's not going to do it every day. And of course, depending on the market regime you have, of course, that's not going to happen. But those assets are designed to increase in value, or not designed to, but they are generally expected to increase in value over a long horizon. Okay. So for example, like I have long only strategies on metals. I have long only strategies on indices that would get absolutely railroaded if I put them onto any FX pairs, because FX pairs aren't designed in the same way. They're not expected to just keep going up over time. I mean, yen pairs, arguably, what have you, but it's just completely different dynamics behind the asset, and you have to take that into account. Some people can trade something really well, other people can't. Swinger Capital, do you think we should aim to reach the 20% in the less time possible? I'm 8-10% in like 1 month, but for gold, I need 8 months, so it doesn't seem necessary to push. Listen, trade as best as you can. Don't use any of this, and this is me, like, you know, working for Darwinex, right? Don't use any of these as your targets. Let it happen naturally, right? Again, going back to my point about stopping trading, if you've had a good month or what have you, just let the market unfold in front of you. If you have a great month, fantastic, bank it, but don't start saying, and I'm not saying that you are, but I'm just kind of warning you on this, is that all of these things, they mean nothing, right? They mean something in the context of Darwinex, of course, like your ranking determines how much allocation you have, etc., etc. But in 6 months' time, you're not going to be worried about your position today. You're not going to be worried about the allocation that you have right now. So it's nothing to worry about in terms of like setting it as a target. Of course, you can say, yes, getting into gold is my target, but time will happen. It will take 8 months minimum. I just best let it do its thing. And the reason I say that is because I've spoken to so many people over the years of working at Darwinex who put too much pressure on themselves to do things as fast as possible. There was a trader, Italian guy called Bato, who, and I'll show you this as an example. I have a lot of respect for him, and this isn't a dig at Bato at all, because, you know, his curve is good. But he did, in his first 2 months, I remember it happening in April, May 2024. He basically hit gold in 2 months. Okay. And then what happened? He just completely stopped trading, like to how he was. His behavior changed so much, and then it's taken him pretty much a year to get back to his all-time highs. Now, is that because he got lucky here, or he just had a bad patch? I don't know. But to me, when this 2 months was unfolding, Bato was Bato, that's the ticker he was trying to find. Maestro said, Bato, that's the ticker I was trying to find. Yeah, this guy, again, got a lot of respect for him. Mr. Robot on X, I believe his name is. There was a lot of posts about him. A lot of other people were talking about him. He was making a bit of noise himself. Of course, we were posting about him and talking about him a lot. And I think it created this pressure pot where it was like, okay, now what's expected? Because you did 20% in 2 months. Now what's expected from you? And of course, he's never done 20% consecutively in 2 months again. And it's kind of like, is it best to just let things happen and you trade as best as you can, or to put things like targets in your own way that's going to hinder your progress? Because outside of Darwinex, you know, your ranking or all of this sort of stuff doesn't matter. It doesn't mean anything. Okay. Like it just doesn't. So again, a bit of a long-winded way to answer the question, but I would say if you're up 8 or 10%, just let the 12% come to you. Just let it happen naturally. Like there's no point rushing it. I think when did I hit the requirements for gold? It was here, so that was in August. So it was in August. So I was 1, 2, 3. Well, I started in May. Pretty much, it was like the last day of April. 1, 2, 3, 4. So in 4 months, I think I hit the requirements for gold. And I just took my time after that. Okay, just trying to detach from the okay, I'm close to making it, or I have made it, or you know, hit the targets, and just let it do its thing. We're going to skip trading time distribution, return distribution by day of the week, all pretty consistent here. Again, this is one that you kind of need a lot more data for this to pick out any patterns. And the reason for that is because every week you only get one Monday, one Tuesday, etc. You only get one day of the week every week. So you only have like 22 data points for each day, pretty much to go off. So again, this data it's such a condensed period of data that we just can't really take anything from it. On top of the fact that it's all pretty consistent. I mean, you've got 2 days where you've kind of underperformed. You're down on Tuesdays and you're down on, what's the other day? Tuesdays and Thursdays, you've kind of underperformed, whereas the other 3 days are very similar. Now, what I'll explain what I mean by this now. If we go to, we'll take a look at THA. Now, I actually spoke to THA about this, so I understand why his looks like this, but you'll see what I mean. Take a look at assets and timeframes. And if we scroll down, now you can see there's a big variance in his performance by day. But if we look at like a 6 months, bearing in mind this is 10 years, if we look at a 6 month, there's probably not much variance, right? So time is something that gives more weighting, more and more weighting to this metric. Now I asked why on Mondays, you can see over 10 years, THA has a negative return of 8.37%. Okay, what's interesting is I was always changing, and it seems since I've spoken to him about it, he stopped trading on Mondays. That's interesting. So I said to THA, I was like, look, you make the majority of your money, or historically have made the majority of your money on Thursdays. Pretty much 50%, if not higher, of his return has come on Thursdays. The rest of the days are pretty sporadic, and Mondays you just lose money consistently over a 10-year period. Why are you still trading Mondays? The reason for this specific trader is because he's a macro trader. So generally, let's say Thursdays and Fridays are his most busy days of the week, because generally US CPI, PPI, NFP sort of comes towards the latter end of the week. So we might get into a position, and if he's still holding that over the weekend, he generally takes the losing trade on the Monday. So we'll close all these positions. So I said, okay, that makes sense. But you know that consistently Monday is just a losing trading day for you. So does it make sense to keep pepper in that. Now, of course, his example is unique because he sort of had, or at least it sounded like he had a logical explanation, but what it looks like is since I've told him, he hasn't traded a Monday since. So maybe not. Maybe it was a logical explanation, but I don't know. Swinger Capital, I have already seen his Darwin. Thanks anyway for the advice. I don't think I'll suffer the same pressure. I'm funded on prop firm CFD with 1.5 mil, but I'll think about your advice. Thanks. Fantastic. 1.5 mil, stunning. Like that's big boy if you can keep that up. So well done to you. Yeah, I mean, just let it happen naturally. The only thing I'll say to that is trading on Darwinex or trading investor capital is completely different to trading props. That's the only thing I will say. Props are artificial environments where you can reset. You know, if you blow an account, you can buy a new one and you kind of back to zero. I've spoke about this quite a lot, where you have like, how should I call it? An artificial equity curve or artificial equity line. So let's say you bought 10 challenges of 100K and you had 1 million in funding and you failed 8 of them and you passed 2. Okay, so if you hit the max stop out for those eight accounts, you're down 80K. Okay, so you're down to 920K. If you pass the 2, you're up to like 950K, and you go, great, I'm live, I'm funded. You take a 10 grand payout, you might be your equity curve might be at 960K. You've put in 5K, took out 10K, so you're up, but actually your simulated equity curve is still down 40K. Okay, yeah, I won't bang on about that too much. But all the best to you, man. Like, let me know if there's anything that you need, any help that you need. I'm presuming that you're still just 1 month in. So I'm always happy to jump on a call or answer any questions you have. Just let me know on Discord, X, however you want to get in touch with me. Always happy to go through some stuff. And now, because it's been a bit of a while since I've done one of these sessions, I'll repeat one of the stories that I used to tell. So there was a trader I worked with pretty much when I first started at Darwinex, and I was reviewing his return distribution by day of the week. And I noticed that on Friday, his performance was significantly worse than the rest of the days. Something similar to THA. His Friday return was really low. The rest of the days were pretty consistent. And we tried looking through his trades, and his trades just didn't make sense. And I was really trying to understand why he was consistently down on a Friday. And it took us a couple of days to kind of come to the conclusion. But it turns out this guy worked on a building site here in the UK. And it's kind of tradition on building sites that they finish at 1 p.m. on a Friday, especially if it's in the summer, and they go have a beer with their mates. And what he would do is he would go to the pub, and because they finished at 1, he's still like pre-New York session. He'd be having a couple of beers and he'd be trading from his phone, and he would just give back everything that he made during the week on that Friday. And we highlighted it, and I sort of said, well, you know, how is trading from the pub serving you, especially when you've had a beer, which we all know is, you know, going to give you some rose tinted spectacles. You're going to look at a trade and think, oh yeah, it's fantastic. So eventually he stopped doing that, and when he went to the pub, he would just leave his phone in his car, in his pocket or something, and he turned it around. But it took me trying to figure out why his performance on a Friday was really poor. The other example I had of this was I was working with a girl. Again, it was around the same time period. I think the girl I worked with was slightly later on. And her Wednesday performance was a lot worse than the other days. It wasn't like crazy, but there was a noticeable pattern. And we went through all of her trades, and we noticed that there was like some slight differences or a bit of a variance between the trade she took on a Wednesday and the trades she took the other days. And basically what we dug it down to, again, after a long conversation, was that Wednesday was the only day of the week that she would drop her kids at school. And so she would always try and take a trade before she left the house. Okay, so she was in this rushed mindset. So trying to juggle trading with kids and you know, the school run and all this sort of stuff, and she would just make poor decisions in the heat of the moment, and therefore it affected her performance. But again, she was so numb to it, she didn't realize, and she just carried on and on and on, doing the same thing again and again and again, until we sat down together, and I was like, listen, there's a pattern here, there's something that's happening that needs to be diagnosed. Is it a strategy related issue? Is it something that's, you know, for example, you're trying you're trying to do a trend following strategy on a day that is, you know, known for mean reversion. I don't know. Or is it something that's, you know, personal to you? Are you doing something on these days? Is it a day of the week where you go into the office and therefore you don't have your train set up? Like, it's all of these different factors that can come into play here. And I'm not saying that every day has to be as consistent as possible, but sometimes there's a low hanging fruit that you can change just to improve your performance or to decrease your poor performance, let's say. Swing of capital. Yeah, I know the difference a lot. A lot of influencer on Darwinex will not even be profitable, but on prop they are. That's not the case for me. Yeah, absolutely, dude. You hit the nail on the head. I couldn't even tell you the amount of influencers that have come through to Darwinex, announced that they're doing something new and you know, publicizing their track record, and then after a month they quit and give up. I won't share the list because no, that one's okay. It's the cancelled Darwin's list that I have, and I have a list elsewhere of influencers who've come in and done that. It's always interesting to keep an eye on them and see how long they last. Generally, what I found, the louder someone is, the worse they are. So when somebody starts, the louder they become about starting their track record, the more worried I get. Just because it's a pattern I've seen time and time again. Okay, so we've got 5 more minutes left before my kids come home and my house turns into carnage. So let's go through some of these statistics. Daily trade frequency 35. Dude, are you trading like, I mean, it's not quite HFT, but that is a lot of trades, man. A lot of trades. Trading with a positive risk to reward of 1.33, duration ratio 0.95. Essentially, your winning trades are the same in length as your losing trades. It isn't necessary to have a positive ratio, but it sometimes shows, specifically more so for discretionary traders, it shows that you have the ability to hold winning trades and be able to cut losing positions. If you're a discretionary trader and your duration ratio is really poor, to me, sometimes that can indicate that you have an issue with cutting a losing position, and you also have an issue with letting your winners run. Not the case for everybody, but in the cases of some people. You have a 47% win rate and you have a slightly positive payoff ratio. I think it would be great if you could potentially get your win rate slightly up. Maybe that would coincide with scaling back on the DAX. I don't know. Or trying to extend your winning trade slightly. I don't think it's necessary, but because you're profitable, any change that you make on here, even slight, will like pay off massive dividends to you. Like Son of the King, I scale in and out and just don't take one position. That's why it's all 35 days. Are you a manual trader? Do you take all these positions manually? If so, like, dude, I don't know how you manage that. Like, I'll be stressed up to my nuts every day. It's more like 5-7 core trades a day. Okay, and then you just pepper multiple positions. That makes sense. Maximum excursions. I mean, let's try and tighten up these. So what I don't like, and again, the guys who've come to these sessions in the past, you know, I like consistency. I love consistency with this. I'm not happy, but I don't necessarily mind massive winning days, because again, it shows you can hold a winning position. It shows you know when to put your foot on the gas when you're in a winning trade. Absolutely fine. When we have these massive spikes to the downside, I don't like that. We could tighten this up massively. I need my Epic pen back, but it won't let me download it for some reason, so I can draw on my screen. But what I would do is I'd try and do some work, giving yourself like a max MAE cap and calculating what your return would be if you'd have enforced that cap. So for example, this big losing trade down here, I think you closed it up here. There is a little black line there which shows where you actually close the position. So it was a losing trade anyway. It wasn't a winning trade. Okay, what would happen if I'd have cut it at just past my average? Where's your average? 0.2. So your average is way up there. The concern of this, and it's not really a concern, but in my opinion, the concern of this is your average negative excursion is 0.02%. Okay, so that's how far an average trade will go against you before it's closed. But your worst is 3.19. There is a huge, huge, huge variance between those two numbers. And it's not the end of the world, but I would definitely be looking at that to see if you could reduce your moving forward, reduce your worst negative excursion to be more in line with a median. Same on the positive side. Like, is there a way to stretch this out so it's close to the best possible excursion, or bring that down so that you're taking more from or less from more trades, if that makes sense? Value at risk, pretty consistent. Like, it's pretty spot on. At the beginning, it took a bit of time for the VAR to catch up, but ever since then, your bands have been so tight. So fair play to you. Even though you're entering multiple positions, like, your value at risk stays pretty constant throughout the whole thing, which is great to see. Your monthly rotation, does that only show from? Oh no, that is your track record length, isn't it? You've been training a lot less recently, which is interesting. Yeah, but it doesn't show us too much. But yeah, overall, I mean, fantastic start. We've been going what, 5.5 months, and you've done almost 11%. If in another 6 months you've done another 11%, you're looking at a 20% year annualized return. Like, it's fantastic. Most people can't do that. Most people can't outperform the S&P. Most people can't outperform, their peers. You're 884th in the rankings, and for a good reason. So it's an absolute fantastic start. I think we need to revisit this in 3 months or 6 months time, and see where we are with things. And hopefully the patterns that I've spoken about in this session will either have like dispersed, and we can see that they were just due to the condensed data period that we're looking at, or the data set that we're looking at. And yeah, hopefully we'll see that your return is above 20% and that you'll be in gold in 6 months' time. Swing your capital, by the way, I've already sent a DM on Discord when you want to reply to that. Okay, fantastic. I will reply this evening. Son of the King, thanks for the analysis. I appreciate the insights. Absolutely no problem, dude. Usually I go over the metrics on DarwinX.com as well. I'm going to have to postpone that for next week because I've got to close down the session now. And who was it who sent in their Darwin as well? We'll take a look at yours next week if that's okay. Risk 1%, or I can do it privately for you, dude. Like, feel free to message me on Discord and I can do a private analysis for you as well. So yeah, guys, I want to thank you all for joining the session anyway. Son of the King, thank you for putting your Darwin forward, and thank you everybody for asking questions. Today's been quite an active session, so I appreciate that always. I love to chat, and love it when you guys are kind of active in the chat box as well. So I will be back on Tuesday for a strategy development and building session with Blaine again. So that'll be the next time you guys see me. So I hope you have a fantastic rest of your week and weekend, I should say. I hope you have a fantastic rest of your morning, afternoon, or evening, wherever you're watching this from in the world. And I will see you in the next session. Peace out, guys. Have a good one.